We're really starting to get into the harder earnings of the companies that reported so far. 72% have beat earnings estimates. But Stephanie, a lot of the stocks have sold off on good reports.
You know, it's interesting. I think that it's a little misleading because expectations have come down so much, right? I mean, maybe people were expecting 1-2%, so you're looking at like maybe 4-5%, maybe 6% ex financials. So, you know, the headline reads well, but I think underneath the surface, companies are being very conservative with guidance. So they may be able to beat those lowered expectations, but it's been more important to listen to what they say. And overall, there's a cautious tone.
So the stocks that are pulling back, are you buying any of them, or do you think that there's more of a market correction to go?
Well, you know, I think that we could take a pause in the market, just given all the uncertainties, you know, and if you look at the U.S. economic data points, we've kind of stalled out a little bit, if you will. We're still seeing good, you know, manufacturing numbers. Housing, I still think, has bottomed. Job still is a question mark, but we're better than where we were. But we could just take a pause because the first quarter, again, we were up, what, 12% in the market. So you take a pause, you look at the companies, and you analyze the fundamentals, those that you feel really good about. So, for example, last week, Stanley Black & Decker, you know, just a big disappointment. I think there were a lot of one-time events and that kind of thing. We did a little bit of, you know, a lot of digging, if you will, and that's the one that we were buying. EMC, it's another one, that high quality, best of breed, great balance sheet, great market share position. That's one that we were buying. You know, we were quick to take some money off the table on something like a Weyerhaeuser in front of the quarter because, well, we could get a sell the news because it's up, you know, 25% from its low. So there's a lot of, you know, industry dynamics that are going on, and I think it's a case-by-case, stock-by-stock situation.
Speaking of one specific stock, Apple's had a pullback over the last week or so, and we're getting earnings tomorrow. Is this something that you buy if it goes down more, or what do you do with the stock?
I mean, it's a wild card. I think we're all kind of just a bit nervous about it because we just, it's hard to tell. There's so many moving, you know, parts. I kind of like the fact that the stock is down from its high headed into the quarter, even though it's still up 35% year to date. I mean, it's been a huge stock. So, you know, we're more inclined to buy if it does pull back substantially. Because, again, we've talked about so many times the great product cycle story, right? I mean, you got the Mac refresh, you got the TV coming, you got the new iPhone 5, and I don't care if it comes out in August or October. It's coming, you know, and that's a positive. Stock trades at 9 times X cash. They've got a great balance sheet. Who knows if they're going to split the stock? Maybe they do. But, you know, I think there are a lot of good things. Now, that said, you know, a lot of people are expecting good things from the company. So, and the stock typically does trade off. So we're kind of prepared to buy on weakness, you know, should we get it.
This market is
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to